Greetings everyone, Joseph James here with your another newsletter brought to you by theschooloftrade.com. Today was September 11th, 2009. Before we get started, guys, I want to talk to you guys about our free resource. Go to our YouTube page, YouTube.com/School of Trade. And when you're there, guys, please subscribe to our videos and please rate and comment this video. Now, today's trade room totals, we put 80 bucks in our pocket. Now, this doesn't look very good, but we had actually originally dug ourselves into a pretty good hole this morning. Getting back in the green was actually a pretty good job on our part. 80 bucks total today brought in. This brings our weekly total to $600 and our monthly total as we make our way through the month of September to $810. So we're consistently profitable every day in a very challenging environment right now, which of course is the transition between the summertime trading and the fall trading environment. So next week we should see some volume get back in the market, and of course we should see these results dramatically improve. Now, the term of the day today is trader's tax. We're getting towards the final quarter here of 2009, and someone asked me a question this morning about income tax for futures traders, and of course I want to make this the term of the day today. How do we pay our taxes? As a trader, there's lots of options for things to trade, right? You could trade individual stocks, you could trade options, forex, or futures. Now, of course, stocks and forex, of course, as well as options, are taxed as securities. Now, futures markets, they have a significant advantage. We're classified as futures traders. We earn income as a futures trader. We're classified as a commodity income. That, of course, is taxed at a much lower rate. I want to remind you guys, I am not a licensed tax professional. Please contact your licensed tax preparer or someone you trust regarding the advice you need on how to claim your income as a trader. Small mistakes when it comes to your taxes can mean big problems. So don't take my word for it. Contact someone who's paid to do so. Now, let's talk more about two main categories of income as it applies to traders. Now, again, two rough categories. There's securities and commodities. Now, in securities, you have forex and stocks, which means your capital gains are going to be reported on a Schedule D for actual capital gains, and they're taxed as ordinary capital gains, which of course will tax you at about 35%, your actual income tax bracket. Now, the second category is of commodities, this of course being futures. Now, these capital gains are reported on Form 6781, which qualifies these as a tax split, a 60% at a long-term rate of 15%, and a 40%, right? So there's a split here, 40% at the ordinary short-term tax rate of up to 35%. And of course, you've got this combined rate of 23% for tax savings of 12%. So you're actually going to save about 12% on average trading commodities or futures, right, classified as commodities, than you will trading forex and stocks. So let's say you earn $100,000 this year trading futures or stocks. Okay, so if you trade stocks and forex and you make $100,000 this year in 2009, you're going to pay 35% income tax here in the U.S. on 100% of that income. So of course, 35% on $100,000 means you're going to cut a check for $35,000 to the IRS at tax time every year. Now look at the difference here. If we trade futures, we have that luxury of that 60-40 split, which means now 60% of that is going to be taxed at 15%, right, long-term capital gains rate, and 40%, which is $40,000, is going to be taxed at 35%, which is the short-term capital gains rate. $60,000 means you're going to cut a check for $9,000. The $40,000 40%, that means you cut a check for $6,000. Add them up, and your total cost earning $100,000 this year as a futures trader is only $15,000 at tax time, which means trading futures. Now, of course, again, contact your CPA, contact your licensed tax professional. These two categories, of course, has a difference of over $20,000. You're going to pay $35,000 as a stocks or a forex trader compared to only $15,000 as a futures trader because of that great 60-40 split. Of course, that's going to save you $20,000 this year. That's enough to pay your margins, pay your round-turn commissions for a couple years in advance. Great information here. If you want more information about this, guys, come out and join us tomorrow morning in our live trade room, and I'll be sure to answer any more questions you guys have about whether or not you want to be a futures trader or whether to continue being a stock trader or a forex trader. Now, the beginner's course, guys, the beginner's course is recommended for all free trial members, so pick up a copy of that. Our trade room opens up on Mondays at 7:30 a.m., so tomorrow, right, Saturday, so we're closed Saturday and Sunday, Monday morning, 7:30 a.m., and then Tuesday through Friday, we open up at 2:45. It's available for all trial members and lifetime members. We'll trade the European session at 3 a.m. We'll trade the pre-market U.S. session at 8 a.m. And we'll trade the morning session in the U.S. at about 9:30 to noontime, 12:30 Eastern Standard Time. So come out and join us anytime next week between 2:45 and 12:30 Eastern Time, right? Except for Mondays, we open up at 7:30 a.m. And we'll show you guys live in real time how we practice three very simple jobs, and that is to identify, adjust, and execute. Let's talk about some of the trades we took today. Now, our first trade of the morning was here at 9:14 on the crude. Now, like I said earlier in this presentation, in this video, we dug ourselves into a little bit of a hole, and then we had to build our way back out. Now again, here on crude, this is our first trade of the morning here, 9:14. This is a two-step long at 72.12. We took targets at 3 ticks and then got scratched out on our point of entry when we moved our stop up to our point of entry. So 3 ticks times 2 contracts off at the first target, that's a total of 6 ticks. That puts $60 in our pocket for the first trade of the day. Now the next trade, just past 10 o'clock, I actually had my charts crash on me. I had to bring my charts back up, so lost a little bit of time there. But we got back together here in the room this morning, a little bit after the hour of 10 o'clock here, another two-step long here, 72.05. This was a pretty decent trade. The only thing we really had to be concerned about was that big round number there at 72 even, but it all lined up. Everything looked pretty much exactly as planned, but got stopped out on anyways. Took a stop at 6 ticks. That's, of course, going to cost us 24 ticks, right? 6 tick stop times 4 contracts. So this took our $60 winner and knocked $240 out of that sale. So now we're in the red. Now, of course, moving forward, though, right, we made that money all back. 11.47 here in the crude, another two-step long at 70.76. We took profit here at 3 ticks, at 6 ticks, and then trailed our stop for additional 2 ticks here on the crude. So we took 14 ticks out of that market right there at 11.47. Right now, we weren't done yet, guys. We had some more money to make here. 11.35, just before that last crude trade, we took a trade on the gold, right? Symbol GC right now. This, of course, time frame on this was at 11.34, right? 11.35. GC two-step long at 10.08.3. Targets here at 3 and at 6, and moved our stop up to our point of entry for a total of 12 ticks on that trade. So we took our first targets off at 3 ticks, our second target off at 6 ticks, moved our stop up to our point of entry, and as you guys can see, it came right back down against us, slamming down against our initial stop, and that took us out at our point of entry for a scratch on that final runner. That puts 12 ticks in our pocket right there for an extra $120. So as you can see here, guys, we dug ourselves into a little bit of a hole, but then 2 nice steady winners, right, brought us right back out of that hole and put us up $80 in the day. Now I want to show you guys a little bit more about our secret weapon here, the pace of the tape indicator, right? The POT, the pot, the pace of the tape. This is the speedometer for our time and sales window, and allows us the benefit of seeing price patterns while reading the tape. It's a fantastic tool we use. It's a proprietary indicator, and here's a great example on the S&P. Now today we took a long trade on the S&P, right, at 1040 half. Now this 1040 half entry was perfect. It was a great setup. But what happened is we started to see, and you can see in the lower left-hand corner here, you'll notice that I've circled this area where the pace of the tape showed a pattern that showed signs of deterioration on the speed of the tape. And as you guys know, when price action slows down, we begin to get concerned about, of course, this thing reversing against us. Well, we were using a couple other techniques here. We looked at our momentum indicator. Momentum began to curl against us. The pace of the tape indicator. Now, this is what really made the difference here. The pace of the tape made it very easy for us to make a decision to get out of this trade. We got out at our point of entry right before price started deteriorating to the downside. We would have taken a full stop loss on this, guys, if we wouldn't have been watching that pace of the tape indicator. So if you're trying to learn how to read the tape, guys, right, look no further than this pace of the tape indicator. As you can see, it gives us the benefit of looking for patterns, right? Divergence, we see patterns, we see sloping, increasing and decreasing on this indicator, which is a huge asset for us if you're trying to learn how to read the tape. Once again, this very simple use of this tool allowed us to save money by getting out of this trade early because we saw the deterioration coming. Another example here on the euro, right, looking for a wave pattern here just after 11 o'clock, and as you guys can see here in the lower right-hand corner, we saw increasing, right, increasing speed of the tape. Meanwhile, price began to break below 46.13. And in this situation, we use the increasing speed of the tape as a confirmation tool to get into this trade. So we can use it to get out of the trade. We can use it to get into the trade. The pace of the tape, guys, again, is the speedometer of the time and sales window. And what a useful tool here, because as you can see in the lower right-hand corner, pretty hard to miss the fact that that pace of the tape is increasing in speed. So we see it go from red to yellow to green, and we know the speed of the tape is picking up, and therefore we should be looking to take this trade. If it goes in the opposite direction, right, it actually starts slowing down, we will then, of course, look to get out of the trade or avoid the trade. All right, guys, and as always, guys, come out and join us tomorrow morning, or should I say Monday morning at 7:30 a.m. in our live trade room. I want to remind you guys, we'll give you a free 3 weeks as part of our free trial. I want to encourage you guys to pick up a copy of the beginner's course. The beginner's course is recommended for all free trial members. And please, guys, rate and comment on this video. My name is Joseph James. For more information about lifetime membership, drop us an email, sales@schooloftrade.com, and I look forward to seeing you guys Monday morning at 7:30. Bye-bye for now.